All right, welcome back. Happy New Year. We got our first video for 2026, and we're going to go over a little bit of my outlook for 2026, and we'll look at some charts here in just a moment. But as far as 2026, we're near all-time highs already. We had a great year last year. It was a very choppy year, but it was a year that had plenty of opportunity, especially front-loaded at the beginning of the year, which to me is ideal. And hopefully we can get something similar this year. But as far as for 2026, my base case would be a choppy first half of the year that creates some opportunities for the market to recover for the second half of the year. So since we're at all-time highs, I'm not an aggressive buyer at these current levels. I'd be waiting for a broad market pullback or a sector-specific pullback. So there could be some more deflation in the AI sector. We could see some rotation into energy or out of technology, and that will give me an opportunity to buy the names that I really want to buy at better prices. So just because it's a new year, I'm not rushing in and dumping money into this market. It's the same market that we had last handful of months, and the opportunities have been kind of sparse towards the end of 2025. But as far as positioning myself and my clients for 2026, the top priority is going to be to fund your retirement accounts. That should be the first thing that you're looking to do at the beginning of the year, is get money into those retirement accounts so when those opportunities come up, you have money in those accounts ready to pounce, because these opportunities, they come and they go quickly, so you want to be prepared. So either finishing your 2025 contributions, you'll have until tax day this year to contribute for last year, and then you start funding 2026. Me personally, and for my clients, I recommend that we fund first thing of the year for that year. That way it's done, and you can start putting cash aside for the next year so you can fund it early and have that money ready to go when there's opportunities. So some great accounts: Roth IRA, get some tax-free growth, or you could look at a traditional IRA, or if you're a small business owner or self-employed, a SEP IRA. So we'll go over those in a whole nother video, but that is the priority for Q1. Get those accounts funded and ready to take advantage when volatility hits, which could be very soon. So what I'm watching closely, I'm looking for a 10 to 15% market pullback or on individual names. So we'll look at some of these opportunities later on. But let's just take a look at this S&P 500. So last year we started off around 600 on the SPY, and we finished the year for a total gain of about 15%. But we did have the large drop due to the tariff catastrophe, or whatever you want to call that, the tariff tantrum at the beginning of the year. So the market ended up dropping 21% and then recovering 41%. So if you front loaded and spent all your money at the beginning of the year, you're most likely got a 15% return on your purchases for the S&P. But if you were buying on the way down or on the way back up, you probably captured a 30 to maybe even 40% return depending on where you bought. So it's funding your accounts at the beginning of the year and waiting for some opportunities like we had last year for the tariff tantrum, and then putting money to work. And if you did that last year, you didn't have to do anything for the rest of the year. So that made your whole year by just being prepared and buying at the right time. So who knows if we'll get a pullback like that. And if we do get a pullback, maybe it doesn't slingshot back out of it. But that would be what I would love to see for 2026. Now, nobody has a crystal ball. Nobody has a clue of what could happen. This little green line here would just be what I would love to happen. A choppy first half of the year, and then in March we get a nice pullback, and then May we start our recovery. Now, who knows if that'll be the case? Nobody really saw the tariff news coming or the market reacting as it did. So there'll be something this year. Maybe it's not market wide where we get a big pullback, but it could be individual names. In years past, we had Tesla go through big drops. We had Nvidia go through drama with the Chinese model DeepSeek, and it had a 20% down day and then recovered much higher after that. So there will be opportunities this year. We don't know when they will come. The whole point of this video is to get your accounts funded and ready to roll for when those opportunities do arise, so you can take advantage, because there's a big difference between a 15% market gain or a 40% market gain if you're able to buy when there's panic and when there's uncertainty in the market. You need to be prepared, because if you haven't funded your accounts, you may start funding your money, your accounts on the way back up, and you've missed the best opportunities to buy. We may never see these levels again on the S&P or on those individual names. So Nvidia was 85 bucks in April, and then it reached a peak of 210. So that's a huge swing, and we will hopefully see some more volatility like that. So right now, get your accounts funded and get your shopping list ready. So that's all I got. Should be a very interesting start of the year, and we will have weekly updates, and I'll keep you guys updated on any big news that we got. All right, have a great 2026, and we will talk soon. Peace out.